I have Chinazom Izuora, an investment broker at Parthian Securities, giving us a rundown of what's playing out in the markets. Chinazom, what's driving sentiment in the market today?
Well, a lot of the sentiments in the market have been driven by the policy direction of the new administration. A lot of it has been well received. In recent time, we've seen it started off with the removal of the fuel subsidy, and more recently, we've seen activity driven by the suspension of the CBN governor and the unification of the FX rate. So that has largely driven activity. Of course, the ASI index on Thursday last week hit over 60,000, a level that the market hasn't reached since pre-2008.
All right, but in terms of catalyst that's going to drive the market, what do you make of the half-year earnings expected?
Of course. So right now, a lot of the movement in the market has been information-driven. Just people reacting to the policy directions and expectations. But now that a lot of that initial volatility has gone, we'll really be looking to see performance numbers for Q2. And going into Q3 as well, it's then the performance numbers of the companies that are going to continue to push the market for the rest of the year.
But in terms of sector performances now, what's your take on the banks, and what are your expectations in terms of the half-year numbers?
Well, so a lot of the volatility we've seen with the banks, of course, is people taking position. And of course, we've then seen volatility from people taking profits from the gains that they got initially. I don't know. We have mixed sentiments on what the performance numbers are going to be. Like we know, the Nigerian currency was just devalued. And the currency was devalued, and then you have the liberalization, so to speak, of the FX rate following that. So we're optimistic that the banks are going to capitalize on that to do more business and expand their sources of revenue. But we also know that the things that have been happening, we have inflation at all times high. And just the fact that the FX has been liberalized, fuel subsidies have been removed, we're expecting to see higher operating costs. And that's going to take off some of the gains we can expect from these companies. The banks may fare better than the industrial goods space in the medium term, but we'll really have to wait and see what the numbers are going to be.
I was coming exactly to that point on the industrials and how we're seeing this impact play out. We've seen headlines so far how that has impacted companies like players like Aliko Dangote. And I'd like to get your thoughts around how you're reading this impact in terms of the key industrial companies, so the heavyweights in the market like Dangote Cement and Boa.
Well, we know, so our expectation is that the companies with export businesses may see increased sales just because the naira is cheaper. So that's one expectation. And then we know the government has some other things in the pipeline. So we'll keep looking to the policy direction of the government. If the government does some of the interventions that they promised, if they actually give incentives to industrialists and put some alleviation things in place, then we can be optimistic that these companies are not going to take such a big hit on operational expenses, because it's the operational expenses that are really going to cut their profits. We already saw in 2022, Dangote reported that they had to raise their cost by 3.33%. So we have to wait and see how the changes this year is going to impact them. But if the government comes up with proactive policy measures, then we can believe that the companies are going to do well, if not in the medium term, but in the medium to long term, they should balance out.
All right, but do you foresee any maybe strategies around pricing play out here?
Around what?
Pricing. Do you think the companies may be looking to adjust some pricing strategy to adjust to the challenges?
Well, definitely. We're already seeing some of that. I expect what is happening now, some of the volatility we're seeing, is the market trying to find the new levels. After inauguration, we're already having these conversations that are these the new prices for Nigerian equities? And now with the devaluation, with the liberalization of the FX rates, we're going to keep seeing this volatility until we come to a level that everybody's comfortable with.
All right, but as we wrap up the interview today, and we're looking at your stock picks for this week.
Well, okay, so that's a dicey one. And there are no guarantees with this. But we'll be looking at right now, the banking stocks have started correcting. They started correcting. So we'll be looking at the levels they are going to reach this week's and trying to decide what would be appropriate entry prices for that. Because we believe that in the short term, the banking sector is more likely to overcome the operational and policy challenges a lot faster than the industrials. And we also anticipate the consumer goods space is going to see lower revenues considering the inflation and just the hits that consumer wallets have taken with some of these policy issues.